Hey guys, welcome back to the Financial Hub channel, and in today's video I'm going to break down the markets during NFP. Just looking at the NFP, what I'm expecting to see in the markets, trades that I'm expecting to see. Gold is my favorite for today. That's what I'm really waiting for, so I'll break that down in the markets. If my entries come, I'll take the trade live. If not, I won't be able to execute my trade because I always wait for good entries. Okay, apart from that, this is the festive season and we have a percentage off all our products. We have a sale going on as people prepare for January intake. We've given you a 20% off. Our courses go for 50,000 and now they're 20% off for anyone who pays between now and the 24th of December. And instead of paying 50,000, you're going to pay 40,000. Okay, we've saved you a whole 10,000 Kenya shillings off the 50,000, and it's a good way for you to start the year. Give yourself some skill, change your next year. If you've been looking for some ways to earn and make more money, trading is the place to be. Forex trading is the place where you need to be trading. Okay, so that's what will be happening in the next couple of weeks. Join us, and we're looking forward to seeing you guys soon. And apart from that, let's jump straight into the markets and see what opportunities the NFP has for us. Cool. Basically, what I want to tell you is how I approach NFP. What do I do when NFP is coming? When I have a trade, when I don't have a trade, what am I anticipating? So first things first, what's NFP? So if you come to ChatGPT, digital these days, I asked ChatGPT, what is non-farm payroll? So the main thing to take out of non-farm payrolls, often abbreviated as NFP, is a key economic indicator in the United States that represents the total number of paid, total number of paid workers, excluding farm employees, government employees, private household employees, and employees of non-profit organizations. So the total number of paid workers is basically, you're looking at the workforce in America, seeing how it's an economic indicator showing you how healthy the work industry is, the number of people being employed, the number of people being unemployed, and all that. It's released every month by the U.S. Bureau of Labor Statistics, the USBLS, as part of Employment Situation Report. Okay, so that's basically what NFP is. It's important because it gives us sort of like an indicator of how healthy the economy is in the United States of America. If you remember well, when COVID happened, a lot of people got laid off. So non-farm payrolls, unemployment rate, the number of unemployed people was about 1 point something. It went high, 1 point something million. That was crazy numbers we've never seen since the crash in 1930, 1929. So that was an important time, and it made history. Okay, so when I'm normally looking for NFP, what I do, I normally use Forex Factory. This is where I use it to get economic data coming out rest of the week. I tend to highlight only the high impact news. When you come to Forex Factory, you come to the filter side. I always take the high expected impact and the low, this is not low impact, this is basically the holidays. So I'm normally looking at that. I filter, then I just wait for the high impact news. So you can see today non-farm payrolls is coming out in the next, you can see the countdown has already started. The previous one was 150K, okay? Now people are expecting it to be 184K in terms of employment. So good numbers mean a healthy economy, bad numbers mean a bad economy, okay? Now, before non-farm payrolls comes out, news normally comes out differently, okay? When you're trading news, when you're factoring in news when you want to trade, people have different opinions. So personally, when I'm trading, I don't trade news. I don't jump into news. When news is coming out, I don't do that. What I'm normally looking for is, okay, will the bias I have act as a catalyst in that direction, or will it break my analysis? So for example, I'm looking at the dollar. Now, there's a certain approach I use, and our approaches are different. The dollar for me has been in sort of a downtrend. Before we were in an uptrend, so let's go full screen. Let's do a bit of some analysis here, okay? So before we were in an uptrend, and I'm normally looking at the direction of the trend using the Dow theory principle. You can see market was going higher, high, higher, low, higher, high, higher, low. We didn't break that structure until up here, where market sort of got accumulation, sideways movement, and then market broke that structure to the upside. What happened after that? Market has been moving in a downtrend. Now, there's sort of, if you're my student, if you're in the KST community, someone saying they can't hear. I believe most of you can hear. Mike is saying I can't hear, but anyway, I'm not on mute, so I'm sure most of you can hear me. So I just want to speak a bit faster before we have 5 minutes before it comes out. So whenever I'm looking at the dollar, you can see the dollar for me has been in a downtrend. But I said there's a little bit of discrepancy. This one has been in a downtrend. This is the dollar index. Okay, it's important to pay attention to the dollar index at this time because it's the most affected pair when non-farm payroll comes out. Not pair, but index. Okay, if you come to Euro USD has been also moving in a downtrend. Okay, so DXY has been moving sort of downside. Okay, we had a bit of a correction here. The structure to the downside hasn't been broken. Market is still forming lower lows, lower high, lower low, lower high, lower low. Sort of a double top in a downtrend. If you watch a couple of my videos on YouTube, I talk a lot about that. And I'm still expecting sort of more of a downtrend happening. But the fact that Euro USD already broke that structure, it is not forming higher highs, higher lows. If you know, dollar index and Euro USD are more or less usually inverted. When the DXY is moving down, the Euro USD is moving up. Okay, but there's no been that, what is it called? Like there's a bit of discrepancy between the two. Zimeachana kidogo. They're sort of diverting away from one another. So you can see the Euro USD. I'm expecting it to continue moving down. Okay, markets can spike up. Okay, can spike up, then continue moving down. For me, the pair that I'm really watching, okay, the pair that I'm really watching is the gold market. You can see someone saying they also can't hear me. Can anyone hear me? Just say a thumbs up in the comments. Most people. It's only 2 people who say they can't hear. But we can hear you. Okay, thanks, Simon. Okay, most people saying they can hear. So the rest you can check your audio. So gold, I'm watching for gold. Gold broke structure. Let's look at gold before non-farm payrolls comes out. So gold is the only thing. Disclaimer, what I say doesn't mean trade that, okay? Don't trade what I'm saying. Everyone has an opinion. I might be long now, and then in the next few minutes, I'm in another short, okay? What we keep saying here at Financial Hub, strong opinions weakly held. If I'm short right now and the market changes structure, I'm going to go in the opposite direction. So look at this. This is what I'm watching on gold, because most of you trade gold, okay? Now, gold has been moving, forming higher highs, higher low, higher high, higher low, like that, higher high, higher low, higher high, higher low. We formed this impulsive higher high, which went like most or less what we call irrational exuberance all the way to new highs, okay? Then market strongly fell. I was still looking for bulls to continue taking control of this market. But when market came here, we broke structure. You can see here, break of bullish structure. So now that changed my opinion from looking for a lot of longs to looking for shorts, okay? Now, what I'm expecting here, market has been consolidating. Ever since we got this drop on Monday, market has been in a sideways movement. This usually happens before and before interest rates, sometimes, not all the times, okay? I've been trading for a couple of years. I've seen this happen a lot. So for this one, if market strongly starts moving to the downside, then I'm not looking for anything on gold because I'm expecting it to continue moving down, okay? However, if market is able to push higher, come touch around this level, touch higher, this is the 2050 level. For me, that's a key level that I'll be paying attention to. I'm looking to go short. Now, how do I trade when NFP comes out? I never trade when NFP has just been released. Between 4:30 and 5, I never trade. There's a lot of volatility, a lot of momentum, and the spreads are open very wide, okay? When the spreads are wide, most people start jumping into trades and they never know why. When they just enter, they have a big loss. It's because the spreads are really high during NFP, okay? So take care of that. So personally, what do I normally do? I always wait for 5 o'clock. When the candlestick closes is when I'll be looking to go short, long, whatever, okay? So this one I'm expecting, if markets can pull back higher, I'll be looking to take a short here at 5 p.m., okay? But if market starts dropping strongly, in the next 15 seconds, let's wait and see, then I'll be staying out. Now, personally, I don't let emotions get the better part of me, okay? So I normally like watching like this. So we have about here. So here they'll just come out now. If market strongly drops, I'm not paying too much attention. So there you can see that I'm never jumping into trades just because markets are going down. I'm expecting it to go down long term, okay? But if markets can spike a bit higher, I'll be looking to take that short. Let's look at the dollar index. Shooting to the upside. Now, this one, it's following the Euro USD. If you look at Euro USD, I said we're still going to the downside. You can see that market has still been in a downtrend. Most of these pairs I'm looking to go short. GBP USD falling off the roof. So all these patterns, I was looking for a bit of a flag to here to sell that market. Euro USD, I was looking for a bit of a flag as well. Go down. Aussie dollar, all the same as well. Now, Aussie dollar, I'm looking for more. I was joking about this on my Twitter, people who trade Elliott wave. I was looking for more of an A, B, C correction. So you can see I'm looking for a C down here. I'm looking for these markets a bit to drop to the downside and then go to the upside. So that's on that. So gold, I can see it's not giving me any opportunity. Too bad. Okay, I'm bearish on this one. You can see since I said break of bullish structure, I'm looking for more bearish trades than I am long. Okay, the dollar, I think it will finally now break above this. Okay, it's even broken above this previous level. You can see here. If you remember, I shared that article on my what was it? My on Instagram, Twitter, different places, my community, my students, saying there's disparity between the dollar and the Euro USD. Dollar was a bit lagging. Most of us and most people who commented were looking for Euro to continue moving to the downside, and that's what we're seeing, okay? So, like I said, gold was the only favorite play book I had for today, okay? Waiting for it to move a bit higher. Now, if market creates a new low, okay, if market breaks below this level, so let's highlight it. If market breaks below this level, continues to the downside, then I'm not looking for anything on gold because I was looking for a correction, okay? The fact that market creates a new low, I'm normally trading a single pattern that I trade all the time. I don't jump in between different types of patterns, different types of trades. You can see most of my patterns here is sort of a flag. Now I mix flags with a lot of things. My students know that. But for me, I'm normally looking for a clear flag pattern. What I was waiting on this one is basically, let me draw it for you, what we call an impulse. So that's what I was watching. A bit of a correction like this, okay? And then an impulse to the downside, creating a structure like this, okay? So I was waiting for a structure like that. A lot of people pay the attention to this structure. Now, for me, you can see I was waiting for it in line at a key level at the 2050 level. But since market is dropping now, I can wait out and see. So right now, what a lot of people I see doing, which is a mistake, immediately market starts falling, they immediately start selling. Like I said, spreads are huge. The spreads are too wide, okay? If you go to your MetaTrader, if you go to your, let me check what the spreads are right now on my phone, on MetaTrader. So you can see, I was looking to go, let me show you, let me stop sharing. I was looking to take a short on gold. You can see I'd already calculated my stop loss. I mean, my, what is it called? My lot size, my position size. I was looking to go short on that pair. That didn't happen. So, because I was waiting for gold to reach 2050, that's a major key level. So if you look at the spreads right now, I can see gold has now about spreads of about 10. 10 pips is not little spreads, especially if you're actually it's jumping from 10 to 17. It keeps fluctuating. Okay. If you're a day trader and you're looking to trade such, gold is never the best whenever NFP. And I see a lot of people blowing accounts with it. That doesn't mean you shouldn't trade. Don't get me wrong. Okay. I'm just teaching you an approach that I personally use and I'm paying attention to such stuff. Okay. So if I go back and share my screen, let's go back to the screen. That's basically what I was looking for. Let's look at other pairs. For example, what's happening on the Euro USD. Market has fallen all the way down. I'm not looking to catch a bottom. I never do that. I'm never trying to be the first one to catch a bottom. So this one, market has been a downtrend, can continue moving to the downside, okay? Something that happens, usually when an FP comes out, market can push to the downside, then immediately push to the upside, especially if it gets to a liquidity zone. So you can see this is a liquidity key level for me, okay? If market holds, then you can start seeing some bullish. Now you can see how my bias is all over the place because I'm normally waiting for a clear structure. Whenever I don't have a clear structure, I don't have an opinion in the markets, I'm waiting for a clear opinion. This one, same thing. Now look at this one, same thing. When market broke structure, it's been going to the downside. Look at this. Higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, failed to create a new high, came and broke the structure to the downside, came to the downside, retested this level. You can see market is falling further to the downside. So I'm always following the direction of the trend, especially on the 4-hour chart. Okay. If you look at something else, let's look at Aussie dollar. Same thing, broke structure, started moving to the downside. You can see here, higher high, higher low, higher high, higher low, higher high, higher low, higher high. Came and broke structure, okay, broke structure to the downside.
I have a question.
Now we're getting
What if it's high and then like, you know what I'm saying?
what do you mean?
Like
A high?
uh I don't know how to explain like um hmm.
Because when you're looking at the direction, when I'm putting structure into perspective, you can put it in two ways. Something that you should pay a lot of attention to is time frame. So a lot of people can go to the 5-minute and start saying the direction is on the higher high, higher low on a 5-minute chart. Now, for me, that's too small of a time frame. The 4-hour gives me a much significant time frame or length that can signify a significant swing low.
Yeah, because of the physiological premises. Yeah.
Yeah, and can give you a significant swing high. So for me, the best time frame to look for the direction of the trend is on the 4-hour chart. It's more significant. You can see the impulse is better. You can see a good correction forming along the way. Whenever market breaks that structure, I'm trading in the opposite direction. So if you look at a big picture, let me show you before we come back and talk about NFP a bit more. Look at how I've drawn on the dollar on a big picture time frame. So look at this. This is a 4-hour chart. Whenever market is pushing to the downside, look at this. I mark my lower highs in a downtrend using the arrows, okay? So look at this, lower low, lower high, lower low, lower high, lower low, lower high, lower low, came and formed the lower high, failed to create a new low, okay? Consolidated a bit, and then broke structure to the upside. What happened after that? Higher high, higher low, higher high, higher low, higher high, higher low, failed to create a new high, broke structure, market went down, lower low, lower high, lower low, lower high. Same thing. So that's what I'm normally looking for anytime. Now, when that happens, once I establish the direction of the trend, then I'm looking for a corrective pattern in the form of a flag, in the form of a double top in the direction of the trend. Those are the things I'm looking for, nothing else. I trade one, I'm consistent on 3 pairs, I'm consistent on my risk, same risk, I'm consistent on the pairs that I trade, the patterns that I trade, the approach that I use. For example, like I have to wait for candlestick to close. For example, if you look at the dollar on the 1 hour, a lot of people who can jump to buy, okay, once this candlestick closes, it'll affirm to me that this level has been rejected, okay? If it closes below, okay, and bears can come into play. If it closes above, I stay out of that one. So the market is always giving me information. I never play around with the market information. I always pay attention to candlesticks because whenever you're trading fundamentals, it can be a bit subjective in that a lot of people tend to trade based on their own opinion. When I'm trading technicals,
Yeah.
why for me technicals is much better than fundamentals is because it's more objective. What I'm seeing here, wherever you are in the world, you're seeing the same exact thing. So depending on how you take in that information, depending on your experience, then you can have a better edge than trying to predict what might happen because of a certain fundamental. So if you come and see the fundamental, what has caused the dollar to go up? So if we look at the numbers here, let's just refresh. Let's refresh this page. Look at the non-farm payroll numbers. Came out better than expected. I think that's what gave the dollar a bit of some strength, and that's why you're seeing the dollar pushing to the upside. For me, the news will always act as a catalyst of the technicals, where the markets were to go. If you look at the Euro USD, markets were moving down. The fact that it's continued moving down is because market was forming lower lows, lower highs, lower low, lower high, continue to the downside. Same thing on GBP USD. Same thing on Aussie dollar. Okay, moving to the downside. Same thing on gold. It's unfortunate we didn't get any. I thought market will spike a bit higher, get some entries here, then start going to the downside. But anyway, it is what it is. Never chase markets. That's a rule I have. I'll never start jumping down here and start saying, you know what, markets are just moving. Let me jump into that. That's a high risk trade. I'd rather look for a deep pullback to a key level. For me, gold 2050 is a key level, and then start going short at that point. Okay. So if it closes like this, because markets can easily come back, spike up, and continue moving to the upside. rendering this flag still valid, okay, and I'll look for shorts up here. But if it closes below here, my friend, I'm staying out of that trade. I won't be looking for anything. Another thing that I won't do, if I take trades on Friday, I won't really hold them into the weekend. Why? Because sometimes Monday's market changes direction. So I never waste time doing that. So if gold can come back up, close above, move to the upside, get some touch here, then I'll be looking to go short. Only if it affirms that. If it breaks above, always follow price action. Price action is key. You need to know how to put it into perspective, know how to interpret it, and know how to trade it. Closes above, my friend, I'm staying out of that trade, and I won't be doing much. You can see here, I've already calculated this. I trade multiple accounts on different prop firms and personal accounts. So these were just different lot sizes that are already calculated. You can see I've done 1.12. I have 2 accounts that was to put that, 2 accounts to put that, 1 account to put that size. So I'm normally trading multiple. So before my level is attained, I usually have calculated my entry points, my lot sizing. You prepare everything beforehand. Don't wait for market to reach that level. Then you start calculating what will my stop loss be.
So those are calculated, right?
Yeah, these are calculated. You can calculate them differently. I personally just use my personal. I have a formula that I use. Sometimes, if you're not good with using formulas and math, you can use a PIP calculator. That can really help in lot size, and a lot size calculator.
I use ours.
My FX book has a good calculator. That's what I recommend a lot of people. My FX book, there's a good stop loss a lot size calculator, so you can use that. But for me, I normally
I've heard about that.
Yeah, I use a formula which is quite easy to use. When I want to trade, for example, what I'm looking on gold, for those people who don't know, I have an 80 pip stop loss. So the strategy I use to calculate lot size, okay, calculate lot size, that equals. So what you need to do, you take your risk, okay, divided by distance, okay, distance to stop loss, okay, SL, distance to stop loss, times 0.1, okay. For me, that's the best, okay. So for example, on this one, I have an 80 pip, okay. It was an 80 pip stop loss. It was 80. By risk, I mean, how much are you willing to risk? So I was willing to risk $1,000 divided by 80 pips, okay, times 0.1. And if you do the math, that's what was giving me about 1.17. That's what I was looking to go on gold. I was risking 1,000, which is 1% of my account. So you can do the math to know the others. That's how I calculate my lot size, and that's how I prepare beforehand. Okay, so you can see gold is coming into a lot of volatility. I bet dollar is falling. Yeah, so this was a liquidity zone. Never jump into trades just because it's moving up. You'll see a lot of nonsense. What I like saying, second mover advantage in trading is always the best. I know a lot of people say first mover advantage in business. I want to be the first one to get this bottom. I don't think that's a clever way in trading. You always have to wait for markets to commit to a certain direction, affirm the direction, affirm that a key level has been broken or it has been respected, and then I take a trade. So immediately market is just moving up or down, I never look to jump straight into it. A lot of things can happen that you did not expect. So for this one, still waiting about 15 minutes for candlestick to close, then I'll see what to do. So I normally go scanning. Aussie dollar, you can see that spike to the downside all the way back up. GBP USD, I bet is the same thing. Euro USD is the same thing. Sometimes when market has been moving strongly to the downside and news comes out, continues moving to the downside, but then the next few candlesticks starts moving to the upside. For me, I normally just find that as a spike to the downside, and markets can actually change direction. Because if you come to the daily chart, you want to be looking at how is market closing. If you look at Euro USD, there's a key level here. Okay, so you can see if market is able to push back up and close above, the dollar has been falling for the past 1, 2, 3, 4, 5, 6, 7 days. Okay, we can start getting some pullbacks on Monday, at least back up to these levels before we go further down. If you look at GBP USD, a little bit of the same thing. If you look at the dollar, it's moving up. So if you reject that level, you can see markets starting to move down. So I won't say much. That's how I approach NFP. I didn't come live to tell you the trades that I'm taking, to give you signals. I don't believe in that. I believe in people doing their own analysis, do your own thing, take your trades depending on your own risk parameter. Okay. So I never tell you what trades to take. I tell you how I approach. Sometimes, let's say if I have a trade running before NFP comes out, before interest rates comes out, before CPI or inflation, what I usually do, for example, let's say I had bought here and markets were around this level when news was coming out. Immediately, if my stop loss was here, let me show you, for example, if I took such a trade from there, my target maybe was a bit higher even, okay? Good risk reward of maybe 1:5, and my market was running around here. So before NFP, I'll always do, and I always do that, because I'm not sure, you don't know if markets will shoot to the downside or upside, the immediate thing I'll do, I'll always break even. So I'll have my stop loss a bit higher, okay? A bit higher, I'll leave about 10 pip distance from my entry to my break-even point. Why? Because of spreads, okay? Sometimes, because of slippage. If you put it exactly at your entry point, you can get slippage and markets can take you down a bit lower. So I put it a bit higher, just in case slippage market doesn't get me out at the exact point I wanted. I still don't lose money. I come out of break-even and that's it, okay? So that's basically what I'm watching. You can see dollar starting to push up. Now, don't be following every tick, market going up, down. I see a lot of people paying attention to things like the 5 minutes. And I think over here, you get a lot of confusion. Look, market shot up, market is shot down, market is shooting up. For me, the 5 minutes, and I'm not saying the 5 minutes don't work. I'm just saying for me, I don't find it significant. I can't make decisions quick enough within 5 minutes just to take trades, okay? So the 1 hour is good for me, and that's it. So that's what I'm watching. My main pairs that I trade is the USD card, Aussie dollar, and gold. So those are the only things I'm watching. I didn't have anything much on USD card, didn't have anything much on Aussie dollar. The only thing I was paying a lot of attention to was the gold market, which was waiting for it to touch the upside before I get a sell. Okay, my targets were here, the previous low. You can see market sort of already tapped it. I expect this market to continue falling off the roof. It can continue doing that for some time. Cool. So do you close positions on Friday night? I mostly, someone is asking that, Michael. I mostly just break even on Friday. If market has moved towards target, Fridays I'll always break even. I know what happens on Mondays. Monday, market can change sentiment. The bullish players for last week can take their profits and market changes direction. So for me, I always break even. Or if market has moved, let's say, 80% to target, I'll break even. If market has moved 80% to target, I'll always break even, okay? So what timeframes do you use for entries? So you can see here, let me just refresh this so that you can see my main timeframes. I only use 3 timeframes, okay? Here, I only use the daily for the direct big picture, what's happening in the markets. The 4 hour, I'm looking for patterns. I'm looking for that higher high, higher low direction. And then I'm normally using the 1 hour for entries. I always wait for the 1 hour candlestick to close before I get entries. I never jump into markets before that. Sometimes the maximum I can go to is at 30 minutes, maximum. Okay, maybe I'm not getting good confirmation on the 1 hour, maybe it's not clear, then maximum I'll come to is the 30 minutes to get entries. But maximum I like taking the 1 hour. They're much solid, much better for me. Okay, do you trade breakouts and retests? No, Oliver, I don't trade breakouts and retests because I used to do that a long time. The success rate for me were quite low because sometimes when you get a breakout, some two things happen. Either you can get a successful follow-through or what we call a failed follow-through. If you get a successful follow-through, what that means, markets will continue moving to the upside or to the downside, depending on the direction that market has broken out. If not, if you get a failed follow-through, is for example, let's say you are looking for a breakout of this level. Okay, what happened in the markets? If you want to see a successful movement to the upside, what can happen? Markets can continue moving to the upside, which is called a successful follow-through. Also, a successful follow-through can come in the form of a breakout, retest, then continue moving up. But what I get sometimes is what we call a failed follow-through, which is basically a false breakout. Market breaks out, immediately closes back in, retests that level, continues to the downside. Okay, so for example, also here, look at this down level. Okay. There's sort of a breakout here, sort of a retest, okay? Retest actually 2 times, There's this first one that market retested here, went to a new low, came and retested again at this level, went to the downside. So I'm never trading breakout and falls and such stuff. I'm always trading. I only trade the flags. I only mainly trade the flags. Okay, it has to be in the direction of the trend. It has to be in the direction of the structure. I trade this. You see here, when markets were moving to the downside, I was looking for sells. Okay, I was looking for bearish flags. So if you look at them, they look more or less like this. Okay, I was looking for bearish flags, something like that. That was the first one. If you look at another one, I was looking for this bearish flag to the downside. Okay, that's mainly what I'm watching. When market broke structure, okay, you can see here market was going lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, broke structure here and started forming higher highs, higher lows, higher highs, higher lows. Now you can see now there I'm looking for only bullish flags. Okay, I'm always trading in the direction of the trend. I'm looking for key levels. Okay, not only trading the flags, I'm looking for markets to come to key levels. This was another one that I traded. Another one here. Okay, another one there, and one last one in the direction here. Okay, you can see that those are the flags I was trading in the direction of the trend. When market broke structure, that's why you're seeing me here anticipating a flag to touch here, then move to the downside. Cool. So those are the things that I'm normally trading. Direction is key to me. Structure is key to me. The Dow theory principle is key to me. The pattern that I'm trading, which is the flags, is key to me. And then the key levels, the trend lines, those are sort of confluences, are also key to me. So I use that structure or that step-by-step process to get my trades. Always. I never jump out of that. Okay. So one last one before I end it, I want to watch the markets a little bit at 5 p.m. because if you don't know, the New York Open hasn't yet opened, okay? It's open. NFP always comes 1 hour before markets open. So the New York markets open is at 5:30 Kenyan time, which is the 9:30 a.m., okay? Here in Kenya, that's 5:30 p.m. I want to go and pay attention to that because I can get a lot of opportunities there. So what we can see markets, either markets can start rebounding when New York opens at 5:30 or can continue moving to the downside. One thing that I've not looked at, let's look at the US 100. I'll do you guys a disservice if you're not looking at such. So you have the US 100 here, also spiked to the downside. Also, this one, I expect markets to continue moving to the downside. Structure for me on this one, you can see we sort of have a flag here. Yes, markets are spiked around that level, but for me, on this structure, I'll expect markets to continue moving to the downside. Most of my pairs, I'm looking for bearish trades. Nothing much has happened on the US 30. Again, last but not least, US 500, S&P 500. Also, this one markets are spiked to the downside. I can't see clear structure on the US 500 and the US 30. I can't see anything solid. So I'm just saying, look at this. This is just a lot of noise, a lot of sideways movement. I don't disturb myself with that. If you look at the US 30 as well, this is just a lot of noise, sideways movements. I also won't pay too much attention on that. But other than that, pay attention to the dollar. You can see that rejection there. It could be a good rejection for sellers. It could also be sort of like a trap for a lot of sellers where you can see this rejection and start saying, you know what, market has rejected, let's start buying. For me, nothing much on that. So I'm just watching my pairs, Aussie, USD CAD, and gold, expecting these ones to move a lot down in the long term. Cool. You have pivot points in your chart. Do you use them as additional confluences? So someone can see these Fibonacci pivot points. I never use indicators. My partners use this. So I have it here just to check out on what they're looking at, what are they looking at in the markets. So sometimes I put them on, then put them off. I'm just normally seeing it, but I never use it as confluences. I never use them to trade. I use my own, I'm purely a chart analyst using market structure, patterns, key levels, and such a view, okay? Those are the only things I trade. So that's it, guys. Hope you enjoyed that analysis. For me, I didn't get any trade. You can see I was waiting for gold, didn't hit 2050, and that's fine. The market is an arena full of endless opportunities. Next week we'll get more opportunities. The other week we'll get opportunities. Before the year ends, we're looking to have a very fruitful and positive, profitable December before the festive seasons begins. So I hope you enjoyed that. Make sure to join us here at Financial Hub. Come for our classes. Let us educate you as the new year begins in 2024 and have a skill that can take you through the year, a profitable year actually, and end the year differently. So I'll catch you guys soon. And like I always say, remember to stay woke, stay financially literate. I'll see you on the other side.